Okay, good to go. Can you hear me? Everyone hear me? All sorts of changes have been made today. Let's see what we've got on today. Ben, how are you, mate? Right, good to go. Let's riff into it. The others can join as they come in. Welcome to Trade Setup and live stream. It is the 7th of December, so we're getting on Christmas. The Christmas spirit's coming through into the market anyway. So hope we're all doing well. Had a good weekend. I've got my little daughter's birthday today, so she is keen as mustard to have a party tonight, a cake. So bit of organising over the weekend, but yeah, she's right to go. Turning, well, she's 6 today, so she's trying to scam a day out, a day off with me. So it's my birthday. She shouldn't have to go to school. It doesn't work that way. Anyway, we'll rip into it. So anyone that's new, welcome along. Just remember you link to us at YouTube. If you go subscribe to us at YouTube, you'll see the site is in the bottom right hand corner of the screen there. You'll see at Trade Setup capital AU. Top right is linked into us at Facebook there, and you'll subscribe at YouTube. At Twitter in the top left hand corner. You'll see that there. So we put up all bits and pieces of information. Um, Hopefully it's all worthwhile. So I'll minimize this now. I'll get rid of that, and I'll get my screen and make sure it's all to scale. That should be better. We should be filling out the full screen there. So I'm really just going to go over today, talking more about the ASX. I think US on Friday night, if anyone saw the indices where they finished, the S&P into new all-time highs, Dow new all-time highs, and I think the Nasdaq actually traded. I think it was not a new all-time high, but an all-time high close. I'm pretty sure. So they're flying the US. Um, it's kind of irrelevant what problems you throw at the markets at this stage. It's all about stimulus, and not just the stimulus. You got to remember, it's what else are you going to do with your funds? What else are fund, or big fund managers or anyone in particular? What are they going to do with funds if they want to invest, or if they're going to invest? You leave it in the bank, you get nothing. You put it in the market, you get something. You can't put it in bonds. There's no return on your dollar into bond market either. The yields are so low and potentially going lower. It's just there really is no place to put it apart from equities, and that the story has been for a long time now. Any problems, throw some stimulus at it. Who cares about the debt levels? I mean, the debt levels are irrelevant in what's happening in the US. Maybe maybe not down the track, but um, at this stage, yes. And I think the more the money they throw at it, the more people are just looking at, we've got to get into shares for yield. Now, there's going to be on the flip side of that, it's going to probably play up sometime is inflation. Now, I don't think the Fed's willing to let inflation go in the US, so let it go at least a bit to make sure that the economy's back in the growth path again. Jobs data come out on Friday night. I don't know if you saw that. Bit less than impressive. Well, less than expectations, which was a bit of a disappointment. But you did see the unemployment rate did drop by zero point 0.1. I think it was 6.8% to 6.7. But it was a number of new jobs that come on were disappointing. I think it was 400,000 they were expecting or thereabouts, and at 200 or so, and not far off half the expectation. So that's probably the COVID. So if you look at it that way, thinking, okay, COVID is causing a problem, that's probably why there's unemployment, businesses in lockdown, not in lockdown, but in restrictions. But hey, hang on a sec, we've got a vaccine. So it's really a bit of a mix trying to read. You've got the vaccine, which is probably playing off against um, not inflation, the stimulus. So you've got those two playing off against each other because you're talking about vaccines, um, vaccines coming through. Whether we think it's going to do any good or not is another time. I guess we can talk about that another time. But whether it's actually going to do anything is a different story. It's the hopes of more vaccines, nipping this virus in the butt, the world, the globe getting back to normal, offsetting expectations for more stimulus in the US. Now, there is still well and truly expecting some stimulus now that Biden's in, or we think, not according to Trump, but now that he's in, um, stimulus is expected to come through and support the market. So, like we said, you just keep the party rolling in the US, which is obviously dragging us higher. It's depreciating the US dollar, which is helping our commodities, which is, you'll see that across the board. There's a lot of, well, you'll see it down here. These commodity stocks, materials and mining, up 1.6%. So the index itself is up 0.6%. Materials and mining is at 1.6. Sorry, metals and mining up 1.6%. Materials is up 1.63, and resources up 1.7, 1.8%. So really pumping along nicely. Energy is at 1.6. Financials are lagging slightly. Maybe people are viewing that a little bit extended at this stage, and they're rotating out, and just why resources are that hot into resources. Iron ore's clambering higher. It's just powerful. We've got copper that keeps pushing higher. So as long as that US dollar, the pressure's still on the US dollar, those resources will do well. All right, even though the US dollar did bounce slightly on. If you look at the chart, we'll look at that now. Actually, US dollar, it did pop up on Friday night into the close. It was holding these lows, a bit of a squeeze. It's probably just the fact that we're coming into those payroll numbers, which were at 12:30. So no one was really willing to get short or even square up. I mean, if you're short the dollar, the US dollar, you're not too concerned about those payrolls at this stage. But if you're going long, and say, for example, those numbers didn't come out, which they missed the mark a bit, um, probably there's a chance that you can get whipped straight back out again, which the market was doing. It was getting supported. Anyone long off here probably really, I guess, um, lack of a better word, ballsy move to go long off there. But shorts were pretty happy just to stay on the sidelines until they saw that number come through. Saw the number come through, and then just a bit of a squeeze. I think that's less to do with a worse than expected number. I mean, it was a bit mixed. Don't forget, we got the unemployment rate dropped slightly, but the numbers of new jobs have dropped. So it's basically saying that the numbers are decreasing of new jobs. The labour market is slowing. We're not near four. I don't know what they were, 3% not long ago. Basically full employment now. It's not. Um, Look at the US dollar. It's probably well and truly factored in some more stimulus, bit of a squeeze of any shorts played out, which you get in pullbacks. You're going to get the extensions down, a bit of a pullback, squeeze out some either buyers or sellers in a downtrend. You're squeezing out sellers, squeeze them out, put them back on the sidelines. It reestablishes another move down, and so on. It just keeps rinsing and repeating that move. Now that was probably potentially we're just going to see if that was what was happening last night. Sorry, on Friday night. You get a bit of a squeeze up, and it rolls over again and continues that downward trend. It's going to come out of run out of steam sooner or later because one, they haven't come through with stimulus just yet, expecting it by the end of the year. But the longer they take with that, the more chance that we're going to get a deeper correction on the US dollar because people will just get sick of holding US dollar short positions. Simple as that. Whether you believe or not, it should be lower. If it starts to a bit of weight comes into the market on the upside, and you're short, you'll probably think twice about holding a short position, a larger short position anyway, because you don't really want to see those gains evaporate. Now, what if it starts going up, you hold it, and all of a sudden they come out with a really piddly, um, what do you call it, stimulus package, and then the market's probably going to bounce quite hard. But we'll see. So US dollar still edging higher. Sorry, in a downtrend, but we just got this bit of a bounce here. Don't forget we've got the euro and the pound both come under pressure a bit. The pound because of Brexit. I think those talks are stalled once again. They just can't come to terms, and I think England or Britain are talking about a hard exit. Sorry, leaving without a deal. They whether it's a Trump tactic and they're just spruiking that, but they really want a deal, obviously. But they're just talking up, saying we've got no pressure. It's not up to us to come to the table. It's up to the EU, and they're trying to pressure the EU into coming to terms with them, as opposed to coming to some sort of negotiation. Whether it's they're playing tactics, and that's what they've been talking about though, trying to really edge out a better deal for themselves. It's yet to be seen. So I wouldn't expect it'll take much news on the deal to get the pound heading back higher and probably put pressure back onto the US dollar. Obviously, you're buying the pound, you're selling US dollar as a cross, and the euro will probably lift as well. I think the euro had a bit of profit taken into euro as well. You saw the euro move. So this started lifting roughly around 130, look at the euro. I think that euro started falling earlier than that. So it found resistance at around 21. Sorry, it was 9:30 at night, and it struggled later on around 1:30 mark. It was already under pressure. It already had a bit of a bout of selling prior to that, the US dollar lifting. So it was looking at the US dollar, thinking, okay, it's not going anywhere. Let's take some profit, which again weighed on the upside into the US dollar. If it's not going down, it's probably going to be taking a bit of risk off the table, coming into the numbers as well. So anyway, I still think that US dollar generally down, waiting for stimulus. No real news on that. Equity markets are very strong at the moment. Like I said, where else do you put your money? Let's just go and look at the ASX at this stage. What's everyone else's views on, obviously, your long equities? You're pretty happy at the moment. We'll go to a daily chart. So this is, I forgot, we probably talked about this before, but this is the kind of scenario I'm looking at on the ASX. We've got key resistance zone at 68.45. Okay, we got that extension that when we broke up the new all-time highs, and we popped up there before we rolled over. And I'm on a daily chart, don't forget. So we popped up. This was back in Jan, start of the year. We popped up new highs just before February sell-off, February March sell-off. Got smacked back down again, all the way back down to, was it 4,400 from say 67, 68. Sorry, what am I talking about? 70, 71, 72. So this is kind of the leg up that I'm looking at, and it's purely because that is massive push down. That's your first reaction, and then once we start to build, we held an inside level. You can argue that that's the major leg up, not so much from the lows. If you take it from the lows, let's try that. Let's just take it from these lows up to the high. If we do that, we could easily push into new all-time highs. We're pushing straight through the 72 mark into new all-time highs. If we're going to take it from that extended move down, and we call this a volatility action leg. Okay, so that's your leg up. We've consolidated, we've held the ground, consolidated those highs, the top third of that, well, roughly the top third or 40% of that leg up, held nicely, consolidated, and we're starting to lift again. So expanding higher. I wouldn't think it's going to take much to get us to 68.45 at least. And if this bullish sort of sentiment continues into the equity markets, through Christmas, there's a chance that we at least test up into all-time highs on the ASX. Okay, so that's sort of my view. We've got the key anchor at the moment to hold this leg up roughly around, just that level there. What's that? 68, 64.80. Let's just mark that up. Paste text. Let's take that there. What did I say? 60, 80, 64, 80. Just so I remember that. All right. So that's ideally what we're looking for. If this level starts to struggle up here, we start to break down back down below 64.80, it could be a bit of a squeeze out of this leg up. But the ASX, you tend to just, once it's in a trend, it's an established trend, it's going from, we say offer to bid to offer. So bid to offer meaning a buy zone to a sell zone. It's not really pausing too much in between, or faking people out with a bit of a pullback, a flush. It's not that kind of thing. It picks a level, goes to it, and then backs off. So potentially, if we're right, if that is the extension level up, that initial one, we're looking from lows to highs. We're looking up to that 68.45 zone, which is the longer term zone we broke out of before we got to new all-time highs. Okay, so potentially that's where it's going to. If it gets through there, what I'd like to see, if it pumps through there without really, this might be enough of a pullback here, just below the zone, to push straight through, and we target up into new all-time highs. We want to get through that 71.50 zone or push higher. And then we're looking to 74.80, 75, say 74.80, 75, just up here. So we'll see how that goes. So far, so good. The market is, like I said, strong. So that's just what we're looking at on the ASX. Got oil. Let's just look at the major commodities. You got a lot of them are just really powering on nicely. Copper. Copper's just heading high. It is extended. It's got through this level here, key high on a daily basis, and that was back from Feb 2018, or June 2018. These sort of minor double top there, not minor, but double top here, powered straight through. It really didn't look back at all, so it's just plowed straight through. So if you're trying to find a level from there, potentially we're heading up to this zone. We might get extended up into that zone there, where there's potential we get up into this zone with a really good run, and potentially we get right up here. So if you're holding some copper stocks, great. There's a few levels up above, and like I still believe copper tends to go from level to level as well. It's quite well done. There's a few, a bit of chop in between, which you would expect. On that daily chart, it is extended, but that momentum is up. There's no doubt in that. It's up. It's not going near vertical, but it is getting a bit extended. So potentially we might see a bit of heat coming out at, was it 3.8, 3.79, thereabouts. This high here might find a bit of heat, bit of back and fill meaning a bit of a squeeze on those buys, and then if we can reset, then it might extend that move up to the next high. Okay, so that's pretty much, maybe we're looking for something like this, bit of back and fill, meaning just to get some heat out of the market. If it starts to consolidate here, then we might be enough to lift and through up to the next level. Okay. Crude oil, bit of a proxy for the markets. That has been heading higher now. I think OPEC and OPEC Plus, which is the other, not the big boys, but OPEC Plus, the other countries, OPEC, the other producers. I like how they call it OPEC Plus. I find that pretty cool. We'll just get in a smaller chart there. It's heading higher. They come to an agreement because I think there's the OPEC Plus group are not liking it's harder for them when you start to cut production because that's a major income source for them. So they were obviously against that. I think they've come to an agreement maybe over the weekend or maybe Friday. I don't know exactly. I think it was Friday. Come to an agreement. Yeah, they'll OPEC Plus can increase output slightly, but they're still going to retain the bulk of their production cuts, keep them in place. So it's a bit of a bonus for them, but in the long run, we've still got those production cuts, and the market seems to be, if you, along with that, you start to get some demand increasing and limited supply still. They've got a lot to get through. I hear that there's a lot of shipping containers out in, it's not shipping containers, but oil containers stuck, just sort of anchored offshore. There's so much supply to get through before they get underway. But I think the market's looking towards that. They're looking to this supply being eaten up pretty quickly, and then for the prices obviously to appreciate from here. Go into an hourly chart there. You can see I think it looks quite good from here. This move here, we've got the bigger moves up. It's contracting in. You can see quite clearly we've had a move up, contraction, squeeze out of some of these longs late into that trend, especially the late comers. If you're earlier into trend somewhere down here, you can ride that through. It's extended back up. So I'm expecting this to pop up through this minor high at 46.40 and extend that move up. Just continuation of this leg up, not so much this leg, but that's, in the bigger scheme of things, you've got leg, pullback, leg up, pullback, leg up. And this, I still think, is going to extend. This leg up here is going to go a bit further. Okay, and that would mean that we're going to hold this higher low. We're going to hold 45.70. We're going to basically hold these current levels somewhere around just below 46, which is only about 10 or 20 cents below where we are, and we're going to lift from here. Okay, so that's what I'm looking for. We start to break down and we get down too deep. We start to break this leg down too much. If you want to be perfect, you can probably take the zones, something like that. You could probably pop back in the zone, test these lows, and still lift. We still have to get down sort of these levels, 45, 40 or thereabouts. So you'd be a bit more concerned that that leg up is not as strong. And if that's the case, then we're running out of steam a bit. And then you'd be due for a bigger correction of this overall, push higher. But at the moment, like you said, it's such a manipulated market. They can go and cut some more to support price. So that's crude. Not much else. I'm looking at gold. If any gold bugs, problem with that is US dollars. US dollar find some strength. It's putting some downside pressure potentially back onto gold. The thing is with gold, it's pushed through this key support zone just below, say the 1800 mark, push through, bounce straight back. So that's not a bad sign for the bulls. Way you look at that more of a flush of a key level. Probably have to go back to daily. actually not so much a key level, but it's pushed through a bid zone, a previous bid zone. So you can see it's come up here on a daily basis. We paused through here, chopped around, consolidated, and extended that move up. So that was where you saw some action still between buyers and sellers, against each other. And then buyers won out, it extended higher. It was day after day after day, just a rapid move higher. And we've been contracting that move ever since, or correcting that move ever since. So this is not a massively big level, but I've just marked it up where it was potentially the one zone where we could find a bit of pressure. Okay, so from here, you'd be questioning whether that's the leg down. We've had a low, lower high, press down, retest the lows, another lower high, okay, press down, retest sort of into that 1800 mark. Put on the 4-hourly chart, it's probably a bit clear. Press down, corrected back up, didn't really get too far, flushed out. So it's probably going to flush out some stops. We were talking about this a while ago. Expect an attack on the stops. So once you get that attack on the stops, you flush them out. What you're doing is trapping shorts as well. Shorts come into play. They sell on the break, and they're the ones that could easily be the fuel for a move back up. Okay, so the markets do it time and time again. If you just remember that for next time you look at, especially the indices, not so much shares. Shares do flush a level. If it's going down, it seems to be going down, and the market can't quite get a foothold to the long side. They'll just let it flush a level and then bang, and use those stops. They trigger some stops in there, sell stops, sell into some liquidity where they're sitting there, and then the market bounces back. Anyone that was short going into that level, or was probably shorted on that break, is now got a buy stop in place, and they use that to propel the market higher. Okay, so just a little tip there. And just take note of it. It's worth looking at and putting in your repertoire of setups, I guess. So we've got, if that's a flush, then you would expect a retest, potentially, which could happen here, retest, and then it starts to hold, something like that. And then you're looking to a new high, and you're looking to potentially go establishing a move back up off that zone. Okay, but that zone's not confirmed. We flushed it out. We could still, from here, we could roll over and just take out this low. There's no reason why we can't get through 1763. We do the opposite. There's going to be some gold bulls that are looking at this going, oh, we're all good now. We're above. But if it starts to do this and hold, chopping around that level, then we could be looking at something like that. Whoop, if I can finish it off. Something like that, take out that level, and if that starts to roll and you're getting people buying it, and as they're buying it, lower highs are pressing down, sooner or later they're going to start to realize they're not going to sell back into the market, and that just creates that sort of a snowball effect, and the market just heads straight back down again. All right, so that's gold. I'm not bullish or bearish just yet. I mean, the overall longer term trend is definitely down. There's no reason why that can't continue. We just got this level of interest at the moment. We can see some action previously. It's come off there. We come back in there. We paused there initially, flushed it out. We bounced straight back up again. So it's a good sign that we bounced up. It's just there's no confirmation that that's the level just yet. If you retest it and hold, okay, that's a confirmed level. We know that other buyers are stepping in there. Sellers are taking a breather, and we're going to start attacking some of these highs. Okay, simple as that. Now, that's pretty much it. Let's look at some ASX shares. There's a couple that I've just got on the cards. We'll start off with AMA. Let me just get my drawing tool up. So if there's anything you want to look at, put it in the chat, and then we'll just we'll go through it bit by bit. Even if it's a currency, it doesn't really matter there too much. We'll potentially look at Bitcoin and that. I think we'll look at that Bitcoin if any crypto punters. All right, so this is AMA Group, not a massive one. $500 million, 565 million market cap, it's done 500,000, bit over today. Not, you can see what it's done in the past. Volume in the past, 12.5 million, it's done, not much at all today. 730,000 shares. Previously, it's done 13 million, nearly 13.5 million shares. So the volume is quite low in the scheme of things, and that's not bad when you're looking at it in context of price action. That trend is up. I'll get more data on that. There we go. There we go. BLX will loop in. So we've got this kind of move up here. That's sticking at the moment. If we break, we're in a bit of a squeeze. So you've got expansion, always looking the market expanding, contracting, contracting. This is all part of potentially just a bit more of a grind, but expansion up, potentially create contracting again. So you look in the market, it's basically getting ahead of itself, pulling back to the MAs, pulling back to the longer term average. Okay, getting ahead of itself, pulling back to the longer term average. So it's essentially you're trying to buy on the rise, and that's all you're really trying to do here. Prime, I think we got into that. We got into something earlier on that one as well. Can't quite remember now. That was back in April. But you're looking for that expansionary phase. You want to take advantage of the expansionary phase because that means if you're doing it right, if your timing's right, okay, you might give up a bit of profit um, by not trying to pick the low, but you also in a much higher probability trade by not picking the low. I mean, there's always someone going to spook themselves picking the low. I got the low, da da da. Guarantee you that's the first time out of 10 they pick the low. The other 9 they're still waiting, holding sour positions. So if you're trying to stick to the time when you're buying into expansion, you're trying to take a chunk of a move, then that's good. You're not putting as much risk into your trading. It's a lot less risky, higher probability, and you're just edging in. You're just taking bit after bit after bit, and you're adding to your gains with minimal risk. Excuse me, and you're using your stops, obviously. So that's what we're trying to do. So we're looking at potentially this part now. Let's take that off. Going back into expansion again. So it's really what levels we're going to keep an eye on. That 80 cent mark. We pop up through 80 and we pull back. Up through 80. I might as well just do it here. Up through 80, and then we can start to pull back and hold a higher low. That's what we'll be looking for. That kind of, you can box up your risk there. You know exactly where you're buying the break. You know where your risk is. It's on the rise because you get the higher low coming into play. Once you get a higher low coming into play, that's confirmation that buys are stepping in at higher levels. You're coming out of contraction. You're looking to go back into expansion, an expansionary phase, and you're looking to buy the rise. So that's as simple as that. So that's what we'll be looking at on AMA. And potentially a move up through, if we can get it somewhere around 80, for example, a move through 90, you might get 20% out of that, looking towards that dollar mark. If you take it back, let me just go back. Your dollar's up here, it's a recent offer zone previously, market flushed down. If we break through that, then you're looking towards $1.40. So there is some fat in that trade on the upside. Gin's another one I was just looking at. Gin is, this action's been pretty choppy. It's had a bit of a move down. That was prior to the sell-off in February, March. It was already in a downtrend there. It was already coming off. So if you don't really need to worry too much about that move. But you can see it's quite powerful through last year. A big move up. Got to 28 bucks. Not far off an equal pullback. If you're looking at this, is sort of that original leg. It's popped up here, consolidated, and then started to lift and really didn't look back. We come all the way back down to that zone around the $7, $8 mark. This zone in here. Okay, big sell-off. So it's cleaned up 90% of those buyers. If you're still holding that, from up here, good luck to you. But that's not trading. So I would advise against that kind of style. So big pullback, like I said. But now what we're seeing is this consolidation for a good part of 6 months now, since April, 6, 7 months. It's pretty much going to be going sideways. All right. It did lift off in September and come straight back down. So it's probably had a bit to contend with. But now the fact that we come off this is around $10 mark, it's been consolidating sideways in that narrow range, very narrow range. We'll get in on that. This narrow range through here is not a bad sign if it can lift. We've got volume coming down, the momentum's starting to slow. Okay, momentum's rolling, but price is just starting to lift. So when things pause, momentum comes out of the action, but the action actually itself goes sideways. The price action goes sideways. It's not a bad sign. You get a bit of heat coming out in the form of there is some selling because there's no more buying coming in. People are chopping around, but there's not a massive amount of selling compared to, well, there's still some buyers willing to soak up at higher levels, willing to support, say, 1350. So if they can do that and we can lift up through 1450, we might have a bit of a run on 15. If that holds up, then okay, we're probably going to head back down. It's going to be a major double top. retest fail, we say up at that level, but if it plows through 15, which you could easily do considering it's consolidating just below it at 14, $1 below. I mean, when markets do that, they, it's quite a clear, it's quite a clear level up here at around 15. It's popped up here, clearly a big backed off from that level. We come back up, it's a clear high to be concerned about. So the fact that we consolidate in there is what it's doing is people think it's going to be that lower high, and if you're holding it, I don't know, say you're holding it even from way up here, anywhere sort of above. You've been holding it for a while, and you watch this consolidation, you look at this low, and you go, we're not going to get there. Okay, like I said, I'm getting out. I'm taking my money and running. I'm going to lick my wounds and go. If you've got a small gain, you bought it off here, and you see that it can't get back up to this high. You bought it around here, pressed up, sat through this pullback. We're back up there again. We're failing to get, to those highs. We're failing to get to new highs, pressing through. Because if it was a strong market, it should just go. Market takes a breather just below it. It's going to bring in some selling pressure, but the way it's getting soaked up, it's always a really good sign. Once it consolidates just below that, if it starts to break to the upside, it's going to plow straight through. So my bet would be that it's going to get straight through 15. If you think of it from that case, if it does, start to rally from here, we're not just going to test. I'll just get back here. We're not just going to test through this high and straight back down again below 15 and flush out all these buys that built up. If we are going to, start to lift, I would expect it to get straight through 15, and then you've got, potentially 20 back on the cards again, that zone from previously. So that's not so bad. We'll see see how all that goes there as well. All right, ASX, a potential short, and that go out to the weekly, and I'll draw that up a bit better. Which I wouldn't have thought it could be a big short on ASX, but fun technically not looking that crash hot. You've got big top up here, and not only that, traded one, got there again, we flushed it out. These 3 weeks here, we flushed it out and we finished below. Not a good sign at all. And you can see that that's led to some more selling coming in, selling. So whether that's just having a bit of a pullback, I would expect it to finish above. That was a major, obviously, with a big sell-off in Jan, Feb. Maybe that's been extended. Potentially, we've got this level here at 70. It should have held up. This sell-off here could have held up there a bit better. Instead, it didn't. It's plowed straight through. So maybe we're just going to grind down to 70 and we're going to consolidate and lift again and potentially go through that 90 zone, 90 area. But at the moment, there's a long-term trend up. It's established. We backed off, had another go at it, on the bounce and failed. So we only just got through those, pre-sell-off levels before stalling in at the previous highs from sometime last year, 2019. Stalled again, so it's pulled back. We're consolidated through here. You can see a bit of a flush, so always take note of those flushes. We flushed the level, back up again. Nice little long setup, but we failed. It just failed to continue again, so that's not a good sign. There's obviously some sellers up there. They wanted to bail. Out they go, and the market's been heading south. So if there's a lot of sellers that already, longer-term holders that are gone, it's going to take a while to attract them back into the market. So if that's the case, you expect that to grind away lower. I wouldn't mind seeing from here, it's basically, if we take that as one leg down, I wouldn't mind seeing a bit of a pop back up, but I want to see it in 2 legs because I think that's really handy. You've got move down, grind back, pop back up, or grind back up, and then you get this kind of move down. You can start to get in, either here or here a bit lower. But you've got more confirmation off that lower high, potentially 85, retest 85 up here, and a couple of legs up, showing there is some buying pushing up, but sellers are still there strong. And if the buyers run out of steam, then it's going to roll. Okay, and then that potentially could take us down to 70 if we don't get there already. Okay, so that's what I'll be looking at there. But I definitely think that structure, a massive double top there, if you want to call it, retest fail. If it was a strong market from this little high low, should have got through it. Okay, it's just obviously running out of value at those levels. All right, let's get into your BLX. We'll do that, Ben. If you've got something else, just chuck it in there. Pretty quiet day today. We'll probably finish early, actually. Coming into Christmas too, I think we'll will quieten down. On whether or not I do another stream next week, we'll have to see how we go. But it's easy when you're a trader when things just keep going up. Everything's quite straightforward, isn't it? All right, BLX. I mean, it is what I don't like is this gap up straight back down. So it's obviously gapped up on news. They sold straight into it again. Okay, so if you're long, I don't know. I mean, if you're long or you're thinking about getting, I wouldn't get long yet. I want to see this kind of action. So if we'll mark that up. It's important after that. You want to be confirmed that you're not just going to jump in willy nilly. You don't throw your money at the market without some sort of confirmation. And if you miss out, you miss out. But what that does is keep you out of trouble. There's more than enough stocks to trade. Um, there's more than enough opportunity. Potentially, that's what we're looking at there. Don't like it with the fact that we gapped up here, basically opened, ticked a little bit higher through 170, and then failed all day. It was all day fail after that gap. Not only closed the gap, straight back down again. We've potentially broken that uptrend. Okay, so if that's the case, I like to think of things in two legs. I think if that's the case, this is grinding up, it's struggling. We might struggle around the 150 mark again. If we start to back off from 150, that's pretty much what we're doing there. We've had a bit of a grind up. If we back off from one, we're just pulling back here. If we start to get weakness come in, then look for that. Not only some little lower highs in here, but this will be a major lower high. All right. Just keep an eye on that. Here we go. That's the zone. If we can't, if we do just plow straight through, we grind our way back up here, good on you. And we're back up, but there's nothing. But the concern is the fact that we've broken this uptrend here. So there's a lot of buyers stacked up in that zone, all the way up here. Basically, to that level there, even higher. So there's enough fuel on the upside to come back out of the market. And you always got to look at things in terms of fuel. Okay, when the market's stretched, there's less fuel to go in and more fuel to come out. When it's the start of the trend, there's more fuel to go into the market and less to come out. So the probability when you're buying early in a trend is high. The probability when you're buying late into the trend of it continuing, you've got to expect that there's a lot more people on the sidelines willing to jump in after you. Okay, and if you can sort of judge it, it's not the world's best trade, not a high probability, or you trade it on a short-term basis. Okay, so there is potential that this move up here is running out of steam, especially the fact that we broke down off that gap up, whatever news it was, and it's starting to run out of steam here. We could potentially have another leg down. It's going to take us through 125. If we don't, when there's no reason to say this back off here is just flushing out a few people and we start to consolidate, we range bound. We range between 125 and 150, great. If it's going to range through there and it has to spend some time building a new leg up, then great. Then you take the break of that new leg up and you expect to push through 170 up here. Okay, so that's the sort of the other scenario that we just chop around here, back forward until we start to lift through. We had a bit of a grind there and we start to consolidate around the highs, look for that breakout. Okay, that's what you'd be looking for. All right, Joseph, there you go. That'll shut me up, won't it? Not bad. That's again on these little ones. I mean, 34 million market cap. You can't really. It's really hard to. With the price action too, you need a bit more liquidity to be judging. This could be I'm not saying that it is, but it could be a pump and dump. It could be pumped up, and then there's something big dumping on it. Because it's only low volume. There's some bids in there. 4 cents. It's not even 20 grand's worth. Next level, what's that? More like 70 grand's worth. Not a massive amount of volume on the bid. It could be stacked as well. Don't forget, it's easy enough to stack the bid if it starts getting to that level. People might just go run and hide, so it's stacking it, trying to bring in more buyers to keep pushing, keep that pump higher, if that's the case. Okay, probably getting a bit sidetracked there, but all this, I wouldn't take much notice of these levels prior because it doesn't look like it's much volume going through. There's been a lot of volume recently. Good volume coming in this little gap up, from 4 cents, roughly 3 to 4. Retested that breakout at 4, and it's on the move back up. There's nothing to be said. It's extended. If you've got it, if you're long, and you're long from a decent chunk, around 1.5 or so, just know where you put your risk. Because when these things start coming back down to earth, depending on what the fundamentals are, they start coming back down to earth. It could be a slow progression, although it would grind down. Initially, it comes down. If that euphoria can't keep it going, then people can be thinking about taking profits. Okay, so it is, yeah, news and drilling. We're not looking for exit. Okay, if you're looking for an exit and you're long, I like to tighten up on a daily basis because you can sort of see that it's going to come down. It's going to come down quite hard, and everyone's going to be running because when it's up so hard like that, there's no question about it. Bulls and bears are both in agreement. Bears are standing aside because it's gone up too hard. Bulls know that it's gone up too hard. So if everyone knows that it's gone hard and you're sitting on some handy gains, everyone's going to be racing for the door at the same time, potentially if it breaks a key level. So you can either have tight risk and just risk that it's not going to go higher, give it a bit of room. But I mean, if it is very, very strong, and you sort of expect there's going to be a lot more people to want to get into it, it should go. You shouldn't have to worry about your stop as much. But if it starts to test these lower levels, say towards 4 again, and starts chopping around here, it's running out of steam, obviously, and you don't really want to give it too much risk, too wide a risk level, because you get chewed up quite quickly. WHK, what? I looked at it a long time ago, so that's quite nice. Again, 64 million market cap, so small liquidity. There's some liquidity on the bid, so I don't mind. See if you can see that. Let's just show you. I know depth. I don't mind that there's quite a bit on the offer, even though I don't believe that's a legit bid, a legit offer. 50,000, 50,000. There's a lot that is stacking up at 35 cents, and that's when you see such a big amount of volume, about 4, 5, 6 levels up. It's more likely to me that they're trying to cap it from, which would be more likely to me it's actually quite a good thing that could see a lot higher levels. It means that potentially there's someone, I feel, trying to build a bigger position and doesn't want to get it, because on these small caps they can get out of hand really quickly. So when you see that kind of thing, I don't believe that's legitimate. And what it's trying to do is cap the rally in a way, before it's let loose in a way. They don't really want it to start. If someone's trying to build a position, you don't want to be building it when it's hitting 40, 45 cents. You'd rather be building it here, so they start to cap it. Now, if that was a hot market, you'll see it. If you see a market that's hot and it happened to catch it at the right time, when the volatility's kicking off, they'll keep stacking the offer if they're trying to slow it down. They're just trying to slow that procession of momentum. You know that there's going to be some profit taken. If you can trigger that profit taken back into your bids, which could be somewhere around here, great. Then you get a better feel, much better feel. Okay, so there's just all these games that are being played. But either way, that is holding higher lows, higher lows, higher lows. It's looking quite nice. A key higher low is at 12. And you can see that because it's had these minor inside levels on the lower highs down, got supported. Whereas here it's just up. Potentially this is another level, around 18 mark. It's going high. So it's going near vertical, which obviously if you're long that, great. If you're long from in here, great. Just let it go vertical, but just know where your risk is going to be. I'll potentially put one at 28 for now. So I think that's a deep enough correction. If it gets through 28, then there's a good chance that there's going to be a lot of flow. It's well and truly extended. There's enough buyers in there that could just start to dive out as well. Same as the one before. PNR, that I've been watching for a while now. I'm just waiting for that to kick off. I wonder if you're waiting the same thing, Joseph. Probably I do think it's going to hold 18. And what I do like about that is see this little flick, this wick down. I think it's very important. You've got this leg up here, quite clear, extended up, minor pullback. And when you pull back into the top third of a move up, and the same on the downside, if you extend down, and that leg down, which there's nothing really here, like leg down, for example, and you can only rally within the bottom third, it's a strong move down, and vice versa for a move up. Strong move up if you can only pull back a top third. Again, top third. This was deeper, and that's why you got this deeper pullback, extend up, flushed out those highs, couldn't kick on. So if it can't kick on, you tend to need to take a deeper pullback, and that's where you might get that macro correction. Just saw your answer, mate. Early bird. Look, it's holding up nicely, and if it can flatten out here, there's a good chance that that 18 zone, 18 level, 17 level at least is not going to get tagged. And what the more it flattens out here, we start attacking these lower highs, especially this one at 22 cents. That's going to start perking up a lot of other buyers that are sitting on the watch, potentially like us. We're just sitting around watching it. So back to this price action, this has got one leg up is made up if you split it down in 1, 2, 3 legs. Okay, macro correction, and that's, I don't know if you can see what I'm talking about. I think of things in different size legs, different time frame legs. And that's what I guess you think of it. If you can think of leg up, pull back, leg up, pull back, leg up. Okay, that's all part of that one leg up, and we're in our first pullback. So we're looking for that secondary leg up. We're waiting to take advantage of it, potentially a weekly chart. Longer term, the next leg up. Okay, and it comes down to that 22 zone, this level holding. So I do like the way it's pushed down to around 8.5, maybe 19 in here. Touched through it, a bit of a flick through, and then come and retested this same level again, and then held up. So if we can get up to through 22, again, just looking through 22, first pullback, buy into that first pullback, and see if it can lift. And then we're going to get that squeeze, which is potentially soon. Just keep an eye on that one. Squeeze up, and it's going to start dragging some more buys, and hopefully we get something like this again. Good expansion high, shallow pullbacks, sign of strength, and see if they can kick on up to 29.30 and above. So looking good. CL1, is this the one that I was trading? No, I was trading CLI. So you talk about pump and dumps. Look at this one here, just as a bit of a reference. Closed off at 14th of November, and you see all sorts of things on Twitter about this being it's a rubbish company, da 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 da. But either it shouldn't be going up. It was pumped up well and truly. Everyone was talking it up, so you got everyone else talking it up, saying great things about it, and you got the other side saying it's rubbish. What do you believe? All I believe is technicals and price action and managing my risk. At that stage, even if I believe the negative people, I don't care because it's going up. And when you get enough people talking the other side and the market's going up, it's got good volume and there's enough, lack of a better word, inexperienced traders that are willing to believe the story without doing their own research. I guess it's a hard way to learn, but that is going to be a learning curve for them. So if you get things like this, even though you might think it's rubbish, it is getting some volume on the lift. It's expanded up here, and then obviously it started falling in a hole. A lot of people exited, and it's closed off. I don't know what it's doing now, but that was end of last year. Was it end of last year? November last year, so just over a year ago. That's done nothing. So if you got caught holding the bag there, then it's unfortunate, but that's what can happen in the markets time and time again. There's a group of pumpers on Twitter. Don't like to say, but there is. They'll pump stocks up, people believe it, and they sell into them, sell them to strength, and get rid of it. So, but you can still trade those. You trade them properly, smartly. You've got your volume here. There's some bids and offers in there. It's lifting. It's on the right side. You buy on the rise. You manage your risk. You don't hold for the moon. You don't believe in the story. You just trade what you see. The story is going to play out as it's going to play out, and you never, don't, I guess, believe your own immortality and think you're right about everything. Trade what you see. Now, CLI, what at a glance, just go back a chart. Obviously having problems with that 240 zone. Where are we? That's 232, probably 235. That's a bit of a crooked line there, isn't it? So there. All right, so you can see had the leg up, fell away these highs, lower highs all the way down, got smashed. That was that big sell-off. Potentially went further than what it should be. That was well and truly undervalued, maybe overvalued. Who knows? Don't really care either way. That's the current trend up. And it's a lot more, you can see that leg up there, it's a lot more subdued pullback, a bit of expansion, a bit of a pullback. As we start to get to these highs again, you can see this is getting a bit choppy. There's obviously selling coming into those highs, which you can see it held up here, and we're starting to get these, pressed down. So at the moment, there's potential hold at lower high at 2. But you're up against this 180 zone. So if you're long, depending on if you're long from in here and you've let it ride so far, potentially have your risk below 180, because if that fails, we may just push a little bit lower, or we may break this all together and start to head down to that dollar mark. And God forbid if there's another sell-off, that'll probably get knocked back down. Yeah, CI one. A goose. Well, forget what I said then. I was doing so well. Is that it? Credit intelligence. Is that the one, Jason? I'll give you my opinion on this one too. This looks better. What do they do? Commercial professional service, industrial specialists. It's into debt restructuring business operating in Hong Kong and credit intelligence, bankruptcy administration. Yeah, so there's a lot of money in bankruptcy administration. Anything to do with that, they'll just suck the juice out of it. Been through that before, and the people who did the best were the lawyers. Should have been a lawyer. All right, just not as intelligent as what I'd like to think. Let's go. So we've got obviously this chopping around here, and we start to lift whatever it was, whatever the news. Price spiked up. Start of the year, didn't really come under pressure, which is a really good sign. When the market was going into a bit of a meltdown, what did I close that for? It was going into a bit of a meltdown. It held up well. So you can see these highs through here. There's a big offer zone obviously up there. So 3.84, where it's traded off there before. Okay, so that's going to be the first concern. But back when it was getting sold off, I think it was, didn't I? Let's take another snapshot. That's better. So what I'll do, so around this zone, a big zone up here. Yep. So back in March, it was actually holding it and going up. When things were getting knocked down towards the end of March, it was holding up quite nicely. That was really the only pullback it had to contend with. And it actually popped up. So the sell-off started in late Feb. So sell-off here, and it actually rallied while the markets were coming in a bit of a meltdown. So it was doing, that's a good sign for me when it's in the face of adversity, and massive fear. So if you're long this, there's going to be some selling, but there's also on the flip side, there's a lot of people with conviction, and you've got to have a lot of conviction when the market is melting down. Okay, so when there's a bull market, it's easy. Conviction is easy to come across, but when the markets are fear-based and they're driving lower through fear, because like the GFC, they were just driving lower. If a stock was holding up, that means there's a lot of people who've got some massive conviction into that stock, and they're solid. So don't expect this is going to shake them out. Okay, so this is sort of what I'm looking for here, and potentially, we've got this zone through. You'd want to see maybe down to 2. I'd like to see 2.4 hold, and I think if it's going to lift, we're going to get that push up to 3. And if it consolidates, especially if it gets another high low here, great. Some volume in here when it was on the rise here, so good. Off that level. So that sort of marks up that level. There's been some handy volume through here. I mean, not massive, but more consistent than previously on this first run down. Lift up here, some more volume stepped in here, which is great, and it started to lift. And then we backed off, obviously, and we've come back into that 2.4 level, and it's been quite consistent volume through here. Maybe someone's building a position. Yeah, it could easily just pop. Once they let it go, they'll let it go, and then they'll start to ramp it as well. So I think if we can get to 3, I think that's, look at the length of consolidation too is very important. So you get probably 1 month, bang, up. Then it's spent about a year going sideways. That's a really good sign for a strong leg up. So if it gets a move on, it's probably really going to get a good move on. Yeah, what's the depth on Spark? Yeah, true, very true, mate. And that's the biggest problem when you're buying it. You've got bugger all to lean on, and this could be just what we were talking about before: stacking the offers, trying to bring in some sellers. But if you're a big buyer, you don't want to load up the boat. You don't want to start showing all your hand. This is a lot of it comes down to like cards. You don't want to show your hand. If you've got a really good hand, the last thing you can do is get really excited about it and show that you've got a really good hand because it just scares off everyone. So if you start loading up you want to buy, I don't know, 10, 20 million shares or even more. If you're a bigger punter, you might want to buy a hell of a lot more. You're not going to put them all on the bid because if someone else wants to buy, they're going to look at you and go, "Oh, I've got to jump ahead of this bugger and start buying at the offer." And then someone else does that and all of a sudden it gets a run on. The offers disappear because they can see it going up, so I can sell at a higher price. All of a sudden, bang, you get this run on the spike to 4 cents. Okay, so it could be that they're just, you're playing funny buggers, but it is, you just got to be wary that if they're not, there's a bit of a sell-off, there's no sort of liquidity on the downside. You'd rather just wait and see. Don't worry about the liquidity until we start to get a bit of a lift. If we start to get a lift to 3, you'll probably see that change dramatically. Okay, whether or not those sellers are legit at 2.7 and 6, whether they're legitimate is a different story. Depth. Just go and see. So some offers in there since 1.5 million shares since the 20th of November. It could be legit. And there's 1 million shares that was put on today. You're stacked up behind that, and that's 2.6. So there's potential that it's just sort of fluffing around here. It's just got through, traded into 2.5, 2.4. So it looks like it's just chomped through 2.4 and maybe traded some into 2.5. I don't know where it was trading before, but yeah, I would just keep an eye on that. I'd rather see it pop, if it can pop, and see what happens on the rise. If that dynamics and spark start to change, then yeah, I think it's going to be a lot different story. And you might see the bids start to load, and the bids start to load, it's either going to get pushed, and they're going to let it go. But what you don't want to do, you don't want to just jump and buy it now and find out you're right, and you've got nothing to lean on. You're back down at 1 cent before you know it. You could take a nibble if you want to add something. I'm guessing if you really like it and you don't want to miss out, don't put all your a full trade size or your full size into it straight off the bat, because if you're wrong, you're wrong, and you've got nothing to lean against, like I said. But if you want to put a little bit in there and you can start building it as you get more confidence, as it starts to lift, it might pop back up to 2.8, 3. It's broken that downtrend, like we're just showing. Here's broken up. We start to get this pop up. See what happens on the downside. It gets a bit choppy on the downside. Then then you might start to add some more and add on the rise as it's going, because it's probably, well, if it gives you a chance, it doesn't just do that. But you know what I mean. Get some conviction on the upside. Then you're going with the flow rather than buying into a pullback. All right, I'll probably call it a day there. I think that's pretty much everything. Got through everything there. Joseph Ben, Daniel Stocks. So market's only up 20 at the moment. We're drifting lower as we speak, which is not so great. Look at that bit of a sell-off there. So big flush in the open, bit of a pullback. So it's pulling back off if anyone knows the SPY, pulling back off those highs. We've just got a daily chart here. Previous highs around 67.13. What we get to, we got to 14, so we got a chip to point through, and that's backing off now. It doesn't mean that that's it. It's all over. It's a double top. No, there's no double top confirmed in one day. It'd be, you want to confirm either off a lower high or it's trading back down to this low 65.11 or thereabouts. So have back off intraday at the moment, but there's nothing to say we can't just start to lift into the close, add another 20 points, we end up 40 for the day. We'll see how we go. Now, guys, thanks very much for joining me. We'll see how we go. Just keep an eye out for if we can do a stream next week. If there's not many people around, it's probably not worth doing anyway. So just keep an eye out for the alert to come through. If there's no alert, then there's no stream. All right. So, like I said, thanks for joining me. If you like what you hear, it'd be great if you can leave us a like. Help spread the word a bit on YouTube channel. And yeah, stay safe, and I'll speak to you again soon. Bye.